Okay, good. Now I'm recording. So once again, today's webinar is operating budgets and strategic planning, and our funder once again. So operating budgets are your overall financial plan for the business. You can also use a budget based on your current situation as the starting point to model new scenarios. I know that creating budgets can be overwhelming at times, and especially if you're newer, it can be hard to know where to start as far as drafting a budget. So why even develop them? It's possible, and I think a lot of people do this, and I certainly have been guilty of this even myself with on like our home budget. You can certainly look at your end of the year financials and just sort of monitor your checking account and stuff and make sure you always have money. And I think it's not an uncommon scenario for, especially small businesses to sort of assume as long as I've got enough money in the bank, and at the end of the year I do my taxes and it looks like I've made a little bit of profit, I don't really need to maintain a budget. But if you're really thinking about doing planning at all and you really want to be able to sort of tighten up your business and really make sure that you're hitting your goals, budgets aren't just a way of sort of taking your end of the year your income statement and sort of spreading it out over the year. I mean, that's one of the things you do, but that's really not the primary point of a budget. The primary point of a budget is to really sort of put down in a quantitative sense what you want to have happen this year, what your goals are for the year, and be able to share that with other members of the business. Sort of like, these are the targets we're trying to hit, and these are the things that we're trying to get to. But also, if you're looking for for funding, it's helpful to have those sort of forward-thinking budgets to be able to show a lender or a funder or somebody about what you're planning to do with the business also. A budget will allow you to judge your performance by measuring your sort of end of the year results against what you plan to do. And also, by doing a budget in advance, it can help you anticipate potential problems. You'll have a better sense of like if something is likely to work or not likely to work, or where where some of the sticky parts could be in making a budget work. They help you assess your strategic risks by providing some feedback about the likely effect. I'm going to talk about using Excel and sort of spreadsheets in there, because you can put some numbers in and sort of get a sense of like, oh, like, that's cutting it kind of close. You can model different scenarios using your budget, and it can be really motivating. It's like, oh, if you can actually see on paper and see the numbers that this is likely to work, it can both be motivational, and like when you see that you're getting a little bit off, you can redirect, but it also can be motivating just to see that things are going well, like according to your plan. You need both a long-term and short-term budget. I'm going to focus today predominantly on the operating plan and the short-run budget, because those are a little bit more detailed, and a lot of the same practices that you would use for that are included in a strategic plan or a long-term budget. But so when you have a strategic plan, so we talked about strategy earlier this week, like when you have a strategic goal, like you're looking to grow, you're looking to add a new venture, you're looking to maybe make a shift, you would develop a long run or multi-year budget, and the number of years you would include in that budget should be somewhat reflective of the period of time it's going to sort of take you to develop and sort of see some impact of that change, that goal you're trying to get to. And the further out you go, the more vague, the less certainty you'll have. I mean, if you've got a 30-year plan, a lot of unanticipated things can happen in 30 years. But but if you're always operating only with 1-year plans, I mean, it's really hard to dream big a year at a time. So if you're really trying to get to, it's kind of like, when you're trying to, do something that's bigger, you need to think several years ahead and sort of have a plan to get there, because most big things can't be just sort of turned around on a dime within a year. But that said, operating plans, so your 1-year plan are developed, sort of through your annual budget process. And that's where you sort of lay out, in bites that you can understand, like what you want to try to accomplish this year. And then ideally that would be towards getting you to longer term goals that you're trying to hit. For an operating budget, and in your long-term budget, we'll use a lot of the same format. You have your budget items. So those are the things that you're tracking in your budget or that you care about in your budget. And then you'll use you'll take your last year's actual numbers, so how you performed last year against those categories. And then your budgeted amount, like what do you want to budget given like what you did last year? What do you want to budget this year? Sometimes a budget amount is going to be just like a refinement of what you had last year or a little bit of tweaking. Sometimes you're just going to it'll be something entirely new, or it'll be something, you decide to eliminate something. So the budget amount isn't necessarily just sort of like you just automatically put in what you did last year. The key difference between doing financial statements and budgeting is financial statements show what you did. They're kind of a reflection of your progress in the past, and they demonstrate sort of where your farm is now and where it's been. A budget is really what you're dreaming about doing, what you plan to do. And so if you just take last year's numbers and you slap them down with no thought, you're kind of missing the point of doing a budget, I think. The budget is sort of what are my goals? And then you're just sort of articulating those goals and sort of thinking through things. So you really should be not just sort of, I think with software like QuickBooks and stuff, you can kind of go on autopilot with budgets, just take last year's and this is this year's budget. But in an ideal world, periodically you'll sort of really go through things and say, are these assumptions still valid? Is this really what we're doing? If you're off, if you've got a budget number and every single year, you're off, significantly, maybe that's something that you need to look at, or, that's something, or if your budget number is just what you did last year, it might not be reflective of what's going to happen this year. So there's a little bit, there's some ability within a budget for you to also, use your own knowledge and sort of, other information that you may have also. The key thing with a budget, and this is also one of the most important things I think, is to have some narrative in that budget, some words that tell why you put that amount in there, what your assumptions are. You want those for a couple of reasons. One is because just from a practical matter, 9 times out of 10, 2 months later, you're not going to remember how you came up with that number. I've done a lot of budgets in my time, and you put a number down and you spend a lot of time thinking about it, but you don't write down how you got there. And then even if you have a formula, you're like, what is that? What is that number? How did I get to that number? The other thing is somebody else, when you're sharing the budget with somebody, it gives them how did you get to that number and what was your thinking? That makes it easier for people to sort of say, well, that makes sense, or that doesn't make sense, or I think maybe you should consider some other factors. So those are the primary things. It reminds you what you're doing. It communicates to other people. It's just, it sort of helps you think through, it helps other people even think through what your budget means. So, other best practices, I like to use, and I know a lot of people use Excel or another spreadsheet program to create a budget. I do know a lot of, and you may, and I'm not familiar with every last bit of software out there that everybody uses, I'll be honest. So it's possible that you have some, really customized farm, software that allows you to really do some financial analysis and budgeting and and stuff like that. So if that's your situation, then you do what you have. But for a lot of people, if you're using something like QuickBooks or something that's a little more sort of off the shelf, I find for budgeting, using something like Excel or a spreadsheet program allows you to really create formulas and stuff that you can change your assumptions in your budget and really play with the numbers. in a way that a lot of times it's more challenging to do with, with something like, with financial software that's really geared more towards other purposes. I also like the fact that you can include a sheet or multiple sheets in a spreadsheet program that includes sort of the key financial information, your wage rates, your prices, your allocation formulas, your loan amounts, other data and stuff that you might want to draw from. And by having a lot of that sort of those sort of your assumptions and numbers like that, it allows you to make updates, to your price assumptions or to your wage rate assumptions that will carry over into the formula. So you don't have to like change that number everywhere in the budget. You can just change, so if you're assuming for labor, like your last year it was $17 an hour and this year it's $20 an hour, you can change that number in the form, you can change that number in your sheet of financial information. And then if you have formulas that link to that number, it'll update it everywhere for you. And so it allows you to model scenarios pretty quickly. But once again, I reiterate, always include your assumptions as a column, and that will remember how you calculated that budget number. So with that, I'm going to stop sharing the PowerPoint, and I'm going to show you on Excel sort of how I have some stuff set up. I don't know how familiar a lot of you are with Excel, so I'm going to assume some like at least basic level knowledge. But if you have questions about how to do something in Excel, definitely ask me. That is that is something I am pretty familiar with. So hold on one sec. I'm going to stop sharing this, and I am now going to share this. Yeah, I thought about it and I decided that actually looking at a spreadsheet would probably be the best way to sort of see how you can use a spreadsheet for budgeting. So in this example, what I've done is I have taken, here's my estimate, like my new annual budget. And I have once in the budget items here. So I would have, my planned revenue from sales. So I sell Apple things, and this is a fairly simplified budget. And so I'm sure I'm missing some stuff, and you might have some more detail. You might want to break down your revenue from different types of markets or different products that you sell. Other income, this could be crop insurance payments. It could be if you have conservation payments or something, other income that's coming in. And then you have your total income. So this is fairly standard, and then your variable costs, and these would be your costs of, of actually producing, your variable costs of producing the crop, or the cost of goods sold. You see that in some, some financial statements, some income statements. And so you'd have here like the major costs that you want to track, like broken out. You could have them all lumped out to just like my variable costs, but like break out the things that you might want to care about tracking more specifically. And those are those variable costs, your fixed costs, labor, your marketing costs, crop insurance costs, repairs, the interest that you are paying on your loans would go here. Your depreciation for all of your overall infrastructure would be down here. The taxes that you paid, and then so that would be your total expenses, and then your net income. And so this, one way to start would be to take in for these categories, go to QuickBooks or whatever your financial software is. You can often export it into Excel, so it's not, you don't have to type in all the numbers necessarily, but, so how you did last year, in each of these categories. And so when you're creating the budget, you can start with last year, and that gives you sort of a framework to start from. And then this is what I was talking about that I think is really helpful, is to have other tabs that have a lot of your key data. So for depreciation, for example, you might have all of the different pieces of equipment you have. You want to keep some list of your assets, so the date you purchased it, the years of useful life that you're assuming, so how often, how long do you think that you'll keep this piece of equipment? And one thing, that's important is that a lot of times, and I got actually into a discussion earlier this week with a vegetable farmer, whose accountant, they depreciate her assets pretty quickly for her tax purposes. But for your budget, you want to actually, one of the things that you're doing with the depreciated assets is you're also want to really think about how you're using that asset on the farm. And so you want part of it by expensing it is to ensure that you're crediting enough of that use so that you're not counting that as profit, but you're holding that money in your account essentially in the long run so that you can ultimately have enough cash in there to do some replacement or upgrades of equipment as need be. So I think it's important, like with depreciation, to be, like as far as thinking about the years of useful life, to be realistic about like, how quickly are you also going to need to be replacing this piece of equipment, or how long are you likely to keep it? And so you would then calculate, here's the initial that price that you paid for that. Here's the plan. If it's got a 10-year useful life, when will you plan to replace that? So how many years of depreciation would you have left? Like how many more years would you be taking that annual depreciation cost? So anyway, with that, so you can see some of these older pieces of equipment, like if I were doing a budget, I would say, oh, okay, so I'm actually 4 years past my planned replacement for this piece of equipment. So it's lasted longer. So at this point, I'm basically getting even more value out of this than I anticipated, that I budgeted for. On the other hand, I also might want to like red flag that because I might need to replace that piece of equipment. Like these might be the things that I'm going to need to budget to replace. So I wouldn't just sort of say, yay, I don't have to, there's no depreciation cost for this piece of equipment. Well, that may be true, but it also may be due for a replacement. So I'm going to have to think about that as I'm budgeting. But so for all of those things that still have some depreciation left in them, some, like I'm assuming that I'm still like using those in the farm business. I might have $80,000, in equipment, for example, on this farm that I would count on my annual budget under depreciation. And then I also have real estate and improvements, and those don't get expensed. Those are also the depreciate. You'd count the depreciated value. On some farms, you might break those, out into into two different numbers. I didn't, just for this example. But you also have for this year, these are all the housing, the machine shop, the trellis system, the apple trees, based on the different planting dates. You also have an annual depreciation of those of $208 for the farm, because you also, you need to replace trees periodically. You need to replace or upgrade housing periodically. You need to upgrade or replace your trellis systems. So you need to you really need to think about what the useful life is, and make sure that you're holding enough money through and crediting like the cost of the consumptive cost so that you can someday replace those, hopefully. And so so that would also show up in your budget. So that would be down here, depreciation. And the reason why, I'm probably getting too far ahead, but so what you would do then is you would go through, and then employees, what are you assuming their wage rates are, how many hours are they going to likely use. And then by setting this up like this, like for example, let's say in the past I assumed that it was $15 an hour for labor, but now rates have gone up, and so now I'm assuming actually that my workers on average are going to be getting $17 an hour. By putting this in here, my per acre cost, my total cost, that would, if I have a budget set up in Excel, that number will also change in my budget, wherever the heck I put labor. So you can see right here, I've got seasonal labor, $250. If I go back and I change this back to 15, it should, yep, see now it's $248. So it's nice because you can put formulas in and then you can model scenarios. And then this is what I had talked about earlier, making it clear that I'm assuming that the productive acres on my farm are increasing this year from 189 acres to 230 acres. So I had some plantings that I did in the past that are now like going to be fully productive. I mean, I had a bad season last year. I only had 650 bushels per acre. This year, I think I'm going to get to 700 bushels an acre. That's really my goal. And I think I'm assuming a $33 per bushel price. You can see this, that's what this is my budget, and these are the numbers here in the formula. So this is telling me when because if I didn't have this here, I'd go back like, 6 weeks later and I'd be like, 33 times 700, like, what does that mean? And so this assumptions here tells me what this formula that I put in here means, like how I'm coming up with this budget number. So that's what I find to be really helpful, like when I do things with assumptions is I know what I'm assuming, and that way if I decide, actually I think I'm really going to get $39 a bushel, I can change that, and then it changes in my budget too. One thing that you can do would be to come up with a budget that is really that you think is really good, and then if you want to just sort of like play with things, what I often will do is I'll just copy the whole thing, the whole sheet, or you can move or copy. You can actually copy a tab, and you can choose move the selected sheet. I'm going to create a copy of this sheet, and I hit OK. And then you see you get annual budget 2. It's the exact same thing. What's nice about this is I can totally mess around with this one and change things, and I haven't screwed up my initial one. So that this allows you to really change some scenarios around and stuff, and and you can do that with any of your tabs in Excel. So all I did here, just in case this is new, is you click on the tab, you right click on it, you go to move or copy, and you create a copy, and it'll create a copy of any sheet. And as I said, that's actually if you've got data that's set up pretty good, and then you want to change some things, but you don't want to necessarily mess up your initial sheet. Creating a copy is really probably the best way to do that in Excel. And as I said, that's why I like doing Excel for budgeting, because it allows me to play with the numbers a lot more than I would be able to do if I were, working in something that was a little bit more rigid. Does anybody have any questions about Excel or using Excel for budgeting so far? I don't know whether you're relatively new to it or not new to it. I will point out one other thing if you are using Excel that can be really helpful is, and this is something that, some people might not know, is let's just say you've got, let me find an example. You've got a number here, like 230, for example, and you want to multiply, you want to copy a formula, but you want it always to use this cell. You want it, because in Excel, like if you copy, like let's say I copy this formula and I copy it down, this formula here that draws from F7 on this one, it draws from F8. Like it goes, it copies down. That's kind of how it. Let me explain this more clearly. Okay, I'll take a step back. So if I copied this formula in Excel and I wanted to copy the same formula down, in this formula, this is multiplying this number here, 230, by this number here. If I were to just if I just copy this formula all the way down, I would get it would multiply, it would draw from this cell all the way down and this cell all the way down to go all the way down here. But if I wanted every single one, all of the figures in this column to multiply by this number, what you do is you put a little $sign in front of the letter, the row and then the column number. And as you copy down, you can see that each one of those, it stays B5 all the way down. So it's always referring back to this number here. This is one of those things that it makes it a lot easier to sort of keep a number and then use it in a formula later on. I see there's one question. Are copies of the spreadsheets you presented available to use as a template? Yeah, I'm going to clean the spreadsheet up and make it a lot more user-friendly, but that is one of the things that I'm planning to do sort of in the second part of this project, but I'm developing them right now, is these sort of resources that people can use as templates. So yes, a copy of the spreadsheet will be available to use as a template. It'll be nicer than this one. These are a little bit half-assed. So any other questions? If anybody has questions about like formulas in Excel or how to, sort of how to create, like one of the other kinds of formulas I find that can be really helpful, and I did this in the machinery and equipment, is to calculate whether, you can use if-then statements. So for example, to sort of flag which ones might need replacement really quickly, I did an if-then. So I said, if this cell here is less than -2. So if it's more than 2 years out, put a 1 in this column, otherwise put a 0. So I wanted to sort of track pieces of equipment that had were sort of past their, more than 2 years past what I had said their useful life was. So like if-then statements can be really useful. And, I use those a lot sort of for, like if it's more than this, then do this. If it's less than this, then do this. And so, yeah, I'll include things like that in the templates too. So with that, if you're doing your annual budget, to move then to a multi-year budget or a long-term budget, the real difference would be that often you sort of start with, you have your present situation, and then you sort of start with, in a way, like what your goal is. And so what you assume the revenue, like when you get to full productivity, like in the goal where you're going to be, like what would you have for infrastructure? What would you need for infrastructure? What would you need for labor? What would you need for equipment? What would you need for supplies? And you would budget that sort of future vision out. And those may not be things, and probably aren't things that you have right now. So you're not sort of like, with this budget here, you're kind of like tinkering around the edges. With a budget that's more than several years out, what you're starting from is like what you're hoping to get to, and then you kind of work backwards from where you are now to like where you want to get to what you need to do to get to that point. And so there's a little bit more, what's the word I'm looking for? Like there's a little more room for creativity there. There's a lot more room for sort of thinking about what different scenarios would be. So doing an operating budget like for the next year is a little bit more cut and dry, because you're thinking about what happened last year, and you're thinking about what's going to happen this year, and you're thinking about what's likely to change. But as I said, like there's only so many really drastic changes you can accomplish in a year. When you're thinking 4, 5, 6 years out, you really have more room to sort of say, like, these are the things that if I were here, I would have. And then you go through models to see whether that's even a realistic goal or even a viable goal for you. So I will have some templates also for you to sort of think about doing that also. But it's, as I said, that's more sort of visioning and planning and sort of putting in different, calculating different things, rather than, sort of like a traditional sort of annual budget process. Let me just get rid of Are there any other questions or any questions about Excel? Because I'm gonna take the Excel thing down. Okay. And all right, so you should be able to see the delightful PowerPoint again. Oh, no, maybe you can't. Hold on. There we go. Yeah, so I think I went over this. So yes, the steps in preparing a long road. Like, what is your long-term goal? Where are you now? And then what do you need to get there? And those are things, as I said, that's much more sort of thinking, running, sort of putting in different numbers and playing with those numbers and talking maybe to advisors, go getting, really thinking through what could be viable, what would how much debt could you afford. So it's a little bit more complicated, but it's also, it's there's more room for creativity there, certainly. And with that, I think next week, I'm going to be talking more about enterprise budgeting. So taking this budget, taking or more of an overall farm budget and going through and allocating, how would you go about allocating some of the expenses and even revenue between different enterprises. And then I also will probably have at that point too a good model for like doing a more long-term planning budget. And I also want to touch on, because I didn't really have a chance today to do that, talk about doing cash flow budgeting. Cash flow budgeting is much more straightforward than this, and there are a lot of resources on it, but I think it's also important if you're really thinking about what you're going to do over the course of the year to have a sense of where, like when you're going to have cash. And so think that gives you some sort of sense of like when you might be able to make certain changes and not be able to make certain changes. And so, the other thing with cash flow budgets is, by looking at your cash flow budget, it might sort of raise the need, in some cases to either change the timing of, when you make certain payments. That might, by improving your cash flow situation, it might make it so that you have the opportunity to do some things that you don't have the opportunity to do. So, and with that, I guess if there aren't any other questions, we'll be back next week with enterprise budgets and allocating expenses.